This is your LMAX exchange technical update for Wednesday, August 10th, 2016. Euro dollar. So the euro is back into the middle of a range confined between the 100-day moving average above, which comes in around the recent high that we saw at 12.30, and the low that we saw going back to the 24th of June, which comes in at 109.12. At this point, a break above the 100-day moving average or back below 109.12 will be required for clear directional insight, though it does look like the market is continuing to favor the downside with rallies well capped. At this point, only back above the 100-day moving average will negate that outlook. Sterling dollar. So cable continues to extend declines with the market breaking down to fresh multi-day lows, the lowest levels that it's been at since going back to early July. The market had broken down on Tuesday to as low as 29.56 ahead of this latest minor bounce, but this sets the stage for the next downside extension back towards a retest of that plus 30-year low that was established back in early July, just under 128. Dollar yen. Dollar yen looks like it's stalled out again, with the market still confined to a very well-defined downtrend, and any rally should continue to be well capped ahead of the next downside extension back towards the 2016 and multi-month low at 98.99. Euro Swiss. So Euro Swiss has been chopping around in a range over the past several days, and at this point the rally up above 109 should stall out again in adherence to this range around 109.45 or ahead of 109.45 in favor of the next downside extension or back towards the range bottom around 107.80 to 108. At this point, it's going to take a close back above 109.45 or a close below 107.78 to break the range. Aussie dollar. So Aussie is broken up through some key resistance that was 76.77. That's the previous high that we saw on the 15th of July. But it's going to take a close above that level, that 76.77 level, to convince of a shift in the structure and a potential retest of the 2016 peak at 78.35. That was the high going back to the April 21st high. At this point, if it doesn't close above the 76.77 level, then it does keep the pressure on the downside and suggests the market's ready to top out again in favor of the next major downside extension. Dollar CAD. Dollar CAD is establishing a major base, and the market has really broken out already, establishing above 31.89 in recent trade. At this point, though, we've seen a little bit of a setback. Those setbacks should be very well supported ahead of 28.62 in favor of the next upside extension towards the projected 135 to 140 area. Kiwi dollar. So Kiwi continues to be well capped in rallies. The market had most recently put in a 2016 peak at 73.25 and has been showing signs of stalling out yet again, this time ahead of 73. At this point, though, we would need to see a break back below recent lows at 70.87 to strengthen the bearish outlook and accelerate back towards more critical support at 69.52 further down. SPX 500. So the S&P 500 continues to post record highs, but this week the market is establishing those highs and then fading back into the daily closes. On Monday we saw a record high back down to the daily close, and then on Tuesday again a record high, just squeaking out a record high, and then back down closing where it opened. So there is signs of exhaustion, but it's going to take a break back below 21.47 to strengthen the potential for a top and accelerate declines. Inability to take out 21.47 will keep the market thinking higher and towards 2200 next. Gold. So gold has seen some consolidation off recent 2016 highs at 1375, but the market should be very well supported on dips towards 1300 in favor of the next upside extension to 1400 and then beyond. At this point, only a close back below 1300 would compromise the constructive outlook for gold.